Dividend investors, bonjour, Mike Héroux here, founder of Dividend Stocks Rocks, passionate investor, and a guy that haven't made a video in almost 2 months. I decided to take summer off. It was nice. I did a lot of stand-up paddling, a lot of running, obviously, and a lot of coaching because 2 of my sons are playing soccer, so we had a great summer. Now I'm back. Last year I was by the lake chilling, and then my email kept popping about Psylogist. Sylogist released their quarterly earnings in August of 2021, and it kind of dropped a bomb. So let's take a look at what happened, why it happened, and my take on Sylogist. So first, let's take a look at this graph where you see here is the stock price from April, which was the peak at $18 all the way down to 10 bucks and something. Now back a little bit higher to $11. The last drop was incurred because of bad earnings, like missing expectations and so on, and we're going to take a look at that today. First, let's take a look at what happened over the past 5 years in terms of stock price. First, you have to understand that Sylogist is a small cap. It goes up, it goes down. You can see it from like peaks of $18 to lows of like $7 here, another $8 in 2017. You have to expect a lot of fluctuation. I do have shares of Sylogist in my portfolio. I bought them at a price of $10.34, which means that I'm still making money on it, but not too much, and at least I got the dividend. I'm not going to revise the business model here because this video is first intentionally to all DSR members. So I invite you to look at the stock card and see what's going on there. And actually, we're going to take a quick peek here because I have reviewed the last quarter there, and you'll get all the information right away. And then we're going to dig a little bit deeper. So why the stock has dropped? So let's take a look at Sylogist stock card. As you can see, we haven't changed our rating. So per rating of 5, which means that it's like a stellar buy. Dividend safety score of 4 out of 5. So again, very, very strong. Forward dividend yield of 4.6%. So this is one of a great company if you're thinking the market is overvalued. I'm looking to add some yield to my portfolio. Well, Psylogist could be quite interesting. We're still working on this part in our database. So dividend growth since is actually NA, but all of our stocks right now are NA. Sylogist has increased its dividend for the past 9 years. And don't forget, DSR members, this call-in for all stocks will be updated shortly. We're still working on the database, but it's going to happen. So this one, 9 consecutive years of dividend increase. It used to trade on the TSX Venture, so a lot of investors don't know about this small company. Now it's trading on a TSC since this summer in 2021. Dividend is quite safe, and we'll take a look deeper at that later on today. What I want to show you here is after the business model and some metrics, we have the latest quarter information. So first, let's read what the CEO has to say. So we were really pleased with our progress this quarter. We continue to make strategic investment, accelerate companies' growth, yada yada. Much is focused on go-to-market, earnings, customers, advocacy, and innovation. So basically, they're very optimistic. They're telling us it's going well. They're also saying we also have fully transitioned to an agile project development methodology in which we release desired, featured, and innovation on faster, approximately monthly cadence. So overall, they're happy with their acquisition. They're happy with their growth. They're happy with what's coming up next. However, here's what we say about the quarter. So Psylogist dropped a bomb of disappointment. You saw that in the graph. I think on earnings day, the stock lost almost like 8 or 9%. So it was a really bad day. I didn't look at it right away. I was just like, okay, so there's probably bad news or missing expectation. Now it's time to dig deeper. One of the problem is hectic metrics, and we're going to see that in a second. Actually, before I explain you that, we're going to look at that on the graph. If you look at the revenue here, it goes down and then goes up and then goes down, it goes up and it goes down. So the reason why revenue is going sideways for this quarter is mostly because they are making a lot of business in the US. The The Canadian dollar is stronger this year than it was last year, so it created some pressure. So that was one reason why revenue declined. The other reason why revenue declined is also because a lot of projects are on hold due to COVID. The thing is, they are working with a lot of governments. So we're talking about cities, we're talking about universities and schools. So all of those are not very fast to take action. Right now, they don't know exactly what's going to happen. They don't know what's going to happen with their budget. So a lot of projects are being delayed. So it doesn't mean that they're not going to ink contracts. It's just saying that people are interested, but they're not ready to write the check right away. So it slowed down the revenue. Combine that with currency fluctuation, and there you go. You have a slump over there. Then if you look at earnings, and this is probably what even bugs me as well, you can see that in 2020 to 2021, earnings took a huge drop. That was because they changed the CEO, they changed their remuneration structure. It cost I think it was like 12 million in cash to pay to the previous CEO in terms of bonuses and so on. So that was not very good. And this quarter, they kind of like made some compensation differentiation as well for other employees. Seems that they're trying to keep and attract talent, which is quite costly right now. So they're spending more on that, which is not a bad thing. But what I don't like right now about it is we don't have a straight trajectory. As I mentioned often, I look at the dividend triangle. The first two component is revenue and earnings, and they're not incredibly encouraging right now. And that's what really sucks about this company at the moment. And this explains why the company went up for $18. Remember, I actually I5'd you for having this stock. I know that over 100 DSR Pro members have Psylogist in their portfolio. It's still rated as a strong buy here. It was on our buy list before it jumped. When it jumped, it was because the new CEO announced a bolt-on acquisition, $35 million. Bang, we're buying products and services that will be a great integration with what we're doing already. We're going to be able to do some cross-selling. The integration is doing well right now, but the problem is the cross-selling is stalling because of the reason I explained you before. Now let's get back to our quarterly summary at DSR and finish this on some good news. Actually, the integration of the acquisition is working well, and also what I like is the deal pipeline is getting better. So what we have listened to on the CEO call is they were saying they don't expect much growth for next quarter, which is another reason to tank the stock. But they know that the pipeline is getting better. They are quite optimistic for Q4, so the end of the year, and potentially 2022. So you have to be a little bit patient. And you know, like me, that the market is not patient most of the time. So that's one of the bad things. As a dividend growth investor, as long as the dividend is being paid and it's increasing, I'm feeling good. Right now, there's no dividend increase that were announced yet. So I'm hoping that next quarter we're gonna have one. If not, I'll have to review a little bit my thesis there, because as I mentioned, revenue and earnings are a bit sideways. If dividend is slowing down, they must have a very good reason to acquire more companies right away and show more growth potential. If not, I will have to reduce my expectation towards Sylogist. What I like about it though is Sylogist ended the quarter with $22 million in cash and another $56 million available on their line of credit. So before that, they had a line of credit that they increased to up to 75. So they take a lot. They took a bit of it to make the acquisition, but now they're still having about the same $75 million to make further acquisition. I'm expecting some move. Obviously, if there's no move and there's no dividend growth, then it will start to not look good. But at this point, I'm willing to be patient, especially because the dividend is more than safe. Last year, they increased it twice in the same year, so it's more than enough for me to stay happy. Obviously, it sucks when you look at a stock that was like almost at 20 bucks and now back at 10. Never fun, but it's part of the deal when you buy small cap. Keep that in mind. So as I mentioned earlier, they are quite optimistic for growth in Q4. I want to finish this video by showing you how is my methodology to look at those results, because now I'm giving you all the package information. But before that, what we do at DSR is we're going to look at the investor's website relation. For Sylogist, it's a small company, so there's not much here to see. They will direct you to SYZ.TO right away to get financial statements and press release. If you go down a little bit, what I like, since they're on the TSX now, is they are offering you some investors calls. So I listened to the Q2. It was like 16 minutes. What I liked about it is basically the questions at the end. We had a few questions from one investing firm, and most of it were regarding the potential growth, and the summary was obviously there's not going to be any growth for the next quarter, but then they're hoping that they're going to be back on track. So the narrative right now, the market is saying, I don't like what's happening right now, and I'm trying to project what's happening right now in the future. So bad news today, projected in the futures will not equal good news, right? Now, things could change very fast with Sylogist. You've seen that on the stock price graph. It could pull out 2-3 great quarters in 2022, and then we're gonna have like a great stock again. Right now it's a little bit low, so the first thing I did is I listened to the quarterly earnings audio call, and then I went to SYZ.TO to get the MDA. Actually, I'm going to show you here, so you get all the list of the things, so you can read the press release, which is going to give you some great information. But what is really interesting, if you have more time, especially when a stock goes down this much, you want to revise your investment thesis. You want to revise the reason why you hold this stock, or maybe why you should buy it, buy more, or sell it, get rid of it. So look at MD&A statement, which is right here, which I'm going to pull out on this screen right now. And one thing that I've looked at is the quarterly highlight, because management is discussing basically what's happening. So it's MDA, and MD&A stands for management discussion and analysis. Obviously, it takes a lot longer to read those, but when you have a situation like this, when the stock is not just business as usual, I think it's really worth it to take a deeper look. So if you look at the revenue decrease, it will be explained right here. I've already given you the summary, so I'm not going to duplicate the information here. What I want to show you is after that, you have all the highlights for the revenues, for the EBITDA, for the working capital, the dividend. So, you know, they generated, and some people were saying, yeah, well, when I look at the payout ratio based on earnings, and earnings were affected by the compensation program. So obviously, if you look at the payout ratio, they look disgusting. However, when you look at cash generated from operation, total 3.8 million, which was lower than last year, I give you that, but 3.8 million, and the company paid 3 million in dividend. So basically, what they're saying here is they have plenty of cash. They're generating a lot of money. Keep in mind that this business is all about recurring revenues. So all the contract they have, they keep paying like months after months after month. So they keep getting a lot of money. They have more than enough to pay the dividend. They have plenty of money in bank as well to continue pay and still look for acquisition. So overall, it's still very positive. And then when you look at the metrics, and this explains really well why now there's not too much interest on the market for this one, is they try to show you, oh, we have increased the revenue by 7% on annualized basis, but it's really because 2015 was really low, and then 2020 is really great. But between 2016 and 2020, not that impressive. So those numbers are going to shut down. They're going to go down very fast when we complete 2021. Same thing with profit. Again, we all know the answers for that, those reasons. So now that you can explain it, it's a little bit better. You feel better about it. You say, okay, well, at one point they must stop playing with compensation and saying, oh, we have to make an extra charge for this and make an extra charge for that. But in the meantime, this is the result that we get. Now, hopefully, we are over this phase and we're going to get some growth and acquisition news. This is what I'm looking for. Not for Q3, but for Q4. You know, investing is about being patient. It's also about investing with conviction. For this one, I am disappointed for this quarter, obviously, but I'm still holding on to my shares. I'm not worried about the dividend, and this is one of the main track. If they don't increase the dividend and they don't come up with an acquisition news in the next 2 quarters, then I'm gonna start asking some questions. But at right now, I'm gonna hold still. I'm gonna sleep well, very well at night, not even thinking about it, to be honest. And one last piece of advice: I don't trade on good or bad news. So whenever a stock jumps or drops in a single day, I usually don't trade. Take a few days to assess the news, understand it, digest all the things, and then I may take a news. On this one, my stance is let's wait another 2 quarters, make sure the dividend increase or there are acquisition news. If none of them happen, then we're going to review and go back to our drawing board. In the meantime, I feel good about it, and I hope that you feel good too. So again, this is not buy or sell recommendation. Please do your own due diligence. Go look at the MDA statement, look at the stock cards at the SR, make your own decision on this, but I just wanted to give you a little bit more so you can make your own decision. All right, so take good care. Starting in September, we're going back with monthly private webinar Q&As and so on. So you're going to receive news about that shortly. And we're also almost done. We're working out with our dividend aristocrats for the Discord server. So the forum is opening up shortly. We still have to work out the morning's coffee break. It's a little bit harder to get audio for everybody, but the forum worked well. So you're going to be able to join that very shortly. I'm expecting at least 500 members out of like the 1600 DSR Pro that we have. If we have more than that, it's going to be awesome. But already the dividend aristocrats are taking this very seriously. We're like 10 in the forum right now, 10 aristocrats plus me and Veronique having fun. So I'm looking forward to you to join us. Talk about your favorite stocks, asking about questions about whatever you want about strategic planning, about buys or sells ideas, strategies, financial planning advice, whatever. It's going to be so much fun. So we're back in track. I hope that you had a great summer and we'll see you soon. Cheers.